Hello guys. How to control risk is the most neglected aspect of trading by traders. Now I will explain. Now most of the traders when they think about controlling risk, they think about stop loss. Stop loss, yes, it is one of the important things that you can do to control risk, but it is not the only one. But in this video, we try to just speak about stop loss, and we will speak about other things in other videos. Now, if you buy, for example, a stock at $20, then you put a stop loss at $19. So, and you buy, for example, 100 shares of a stock. So you are risking $100 in this trade. First, you should be okay to lose this amount of money if the stock goes down. This is the first thing. You accept the risk, and you know that if the stock goes down, you will lose $100 in this stock. Second, the amount that you lose, everybody, when he puts a stop loss, it will be different. Okay, so people risk is always different from one trader to another trader. It depends on your knowledge how to put stop loss and how good you are. Now, how good you are, it doesn't mean that the stock will never go down and hit your stop loss, and sometimes it goes up again. Okay, so when you be a very good trader, by experience you will know where to put your stop loss, but you will never put it as some beginners do, because some beginners, they just go online, they search free information here and there, and they put the stop loss as they read. And most of the people understand that. Most of the people who are online, who are teaching, most of them, they don't trade, and this is a problem. It means you are watching someone, and you are taking information which is a very, very important information for you, but this information is not true. The reason for that is that those people, they don't trade, so they don't know. They are like you, okay? They just go read some books or watch other videos, and they pretend they are traders. And this is a very, very, very important thing online. So you should be careful, and you should understand from where you take your knowledge. Most of the people, okay, for me, I have this. This is a free training, but this is not detailed training. This is not here. I will show you the important aspects of stop loss as to control risk, but it is not detailed. It means I will not show you details how to do the trade and how to do the stop loss, what are the variables, and so on. But to make sure you understand is that whenever you put stop loss, the amount of money that you will lose, understand that you might lose it. So when you do a trade, it doesn't mean when you put stop loss, when you are good, it means the price will never go to your stop loss and hit it. Okay, so understand that. Understand it is a risk. Some people, for example, they use percentage. For me, I have seen a guru, and he said to me, "Oh, put 10% or put 2% or 5%." This is not a good thing to do. Stop loss. Okay, you should never put the same stop loss for any stock. Stocks are different. How can you put stop loss for everything? Okay, so this is just an example. I'm speaking here about percentage, like 2% or 3 or 10. Now, let's say I will give you an example. You put a stock stop loss at 10%. Let's say I give you a simple example to understand. I'm not going to give small numbers. At least you can follow me. You follow me with this thing. Now, let's say you have $100 stock. It means you want to buy this $100 stock. I give 100 in order to make it easy for you, okay? So let's say you put 10%. 10% from 100, what is it? $90, okay? It means if the stock was $100, you put stop at $90, which is 10%. Now let's say this stock for 5 months, 6 months goes down to 91, 93, 94, then it goes to 90, 50 cents, then it goes to 100, then it goes down, then it goes up. So you will stay, for example, you will stay 6 months, 1 year, 2 years, and you will never know. Now here I'm asking you the question: are you doing swing trading? It means you should stay short term, even if it is months, it's okay. But a trade that it is not profitable, you should exit from it. So here you are just wasting your time. The percentage that you put as a stop loss is false. Obviously it is false. Okay? 10% is okay in some kind of stocks when they are very volatile, but it is not for every stock. That's why you should know how to understand this stop loss. It's tricky. There are some that you go online. I'm telling you the truth because I have extensive experience, thousands of trades I do each year. So the thing is, percentage for every stock the same, it's not gonna work, as I just explained to you. Some people they are very, very scared not to lose, so they put, for example, 1% or 1%. There are some stocks that you can't put 1%. Okay, if the stock is moving $3 a day, how can you put 1%? I will give you the same example. Let's say the stock you bought today is $100. Okay, you put 1%. What does it mean? It means that your stop loss is $99. And this stock each day is going like $2 or $3. So here, you will exit every trade that you do like this. Every trade. That's why a lot of people, when they send me emails, one of the guys, he says, "Hey, Kareem, whenever I buy a stock, I exit the trade because of stop loss." I say it's just because there are two mistakes here you are doing. Either the entry is not good, the second is stop loss is not good. Okay? So understand that in general, in order to control your trade, you should use the stop loss. I'm speaking here about day trading and swing trading. This is what I do. Swing trading is when you hold stocks for a few days or few weeks or few months. Okay, so stop loss is very, very important in each trade. You don't for example you buy the stock today and tomorrow you do the stop loss. No, this is not gonna work, especially for what we do, which is swing trading. For us, for example, as my strategies are concerned, we search the stock at 3 o'clock at the end of the day when we have the signal, and then when we buy the stock, we put a stop loss, and then we close our broker account. It means you just you have done your job. You search for the stock, you find it, you buy the stock, you put stop loss, and then your work is done, and you wait for tomorrow. Okay, if the stock goes up, you begin to make money right away. But if the stock is going down, your stop loss will, in 1 day or 2 or 3, it will handle that. So stop loss is, you know how much you will risk in this trade. Some people, they don't understand. If you put 10% and you have bought $100,000 a stock, you bought a big position, understand if the stock goes to this 10%, you will lose this $10,000. Okay, so understand that. So it's not this game is a game of risk. So don't play with your investment or with your trade. You should be able to understand that when you put stop loss, you can risk all this money that you put in the stop loss. Now, other people, they say because they are beginners, they don't understand what is trading or swing trading, what we call short-term trading. What they do, they say, okay, I will not use a stop loss because sometimes I put stop loss, the stock goes down, and when it goes down, it hit my stop loss, and then the stock goes up. I will ask you the question: how do you know that every stock that you do will be going up again? This idea of going up again, it is an investing idea about the past, that stocks go down then they go up into cycles. No, you are not doing that. You are doing a trade right now. It doesn't. It's not like investing. Maybe you are thinking about investing, because investing you should not put stop loss. So don't be confused between investing and trading. Trading is something active. I buy today, at the end of the day, tomorrow if the stock goes up, I will begin making money. So I will not stay 1 year or 2 years or 3 years, the stock fluctuation going up and down, and then I make money through time or through the direction of the stock. Okay? So day trading and swing trading, that's what I do, is to be precise in putting stop loss. If you don't put stop loss, what does it mean for you? It means it's 100% risk. Now why? If you buy a stock at $100, just an example, let's say the stock is going down 1 day or 2 or 3. First, you will never know where to exit. And then you have this psychological problem, is that you say, no, I will stay more, and the stock is going down. And then you begin from 1% loss, 2, 3, 10%, 20, 25, and then after a few weeks or few months, and then you get this psychological pain. And what do? And then one day you exit. Okay? As someone tells me before, he sent me an email. He said, if I don't exit the trade, I don't get the loss. Okay. I say, if you buy $100 stock, after 6 months, it goes to $25. So you are not risking nothing. And when you want to exit, let's say you stay more and the stock is going down, and this company is bankrupt and you lose everything. So try not to think to do day trading or swing trading, and you think like an investor. Investor is something else. They don't put stop loss in investor because you have a length of time, because he thinks that the stock will move in one year, 2 years, 3 years, 4 years. Okay, so it is not like a day trade or like swing trade. Swing trade is just very quick. Today, you buy the stock at the end of the day. Tomorrow, if the stock goes up, you are making money. So it is something very, very quick. In day trading, in few minutes, you know that you are making money or you're losing money. And this is in day trading. That's why we should put stop loss. If you begin to lose money, you should control it. This is how you become a good, successful trader. And I'm telling you, the last thing is that when you buy a stock in day trading or in swing trading, you should put stop loss, because this, you do it before you do the trade. You should put the stop loss, not after it, because after it, your psychological you will have psychological problems, and these problems will let you stay in a loser. We, for example, as a swing trader, as I teach my strategies, what we should do: you buy the stock, you put the stop loss where you can control risk in that trade, and then that's okay. The next day, if the stock goes up, you will begin following how to follow the trend. If the stock goes down, let the stop loss take care of this, and that's it. We don't want to lose a lot of money in each trade. We lose just little money. And this is just general thing. There is no one who is making 100% winners. There is no in the market. Even he is the best trader in the world, he will never have 100%. Because the market changes each day. So there is no way that you make 100% trades. So this is all for how to control risk using stop loss. And if you are interested more into details to get the training, this is another thing. You can just go to my website and you can just get the training. And then when we have questions, you just ask me questions with an example, and we can do that. Okay, so thank you very much. Please subscribe to my channel and share it, and thank you very much.